Hey everybody, Chuck Vosburgh here from Next Home, and today we've got Steve Kelly with us from All Western Mortgage, and he's going to help us understand what's going on in the mortgage market right now. There's been a lot of information in the news, and some of it's true, but most of it really isn't. So we're going to interview Steve today and get to the bottom of this. So good afternoon, Steve. How are you today? And thank you for joining us.
Great, Chuck. Thanks for having me. Always a pleasure.
Steve, I've been watching the news, and the predictions are from so-called experts that everything from this is going to be 2008 all over again, or interest rates are just going to continue to go up and up and up, as high as 13, 14, 15%. Been hearing all this stuff on the news. What's your take on all this as someone that's been in this industry for, I forget now, what, 30 years now?
Yeah, actually, as of 2 days ago, it's been 30 years, believe it or not.
That is awesome.
So, yeah, I got started in, what was it, October 29, 1992. So,
I think we could call you an expert then.
I guess, just a lot of stamina. So first of all, when I see that on the news, I cringe. I just like, really, I really, a lot of news, thrives on fear, right? Fear. Get the public believing this and that. Next thing you know, it's going the wrong direction. So no, I don't see a 2008 happening because first of all, we don't have the supply. Back in 2008, I mean, that was a hard thing to go through, but we had about 4 million homes in the US that were for sale. We had an abundance of supply. Okay. Now we only have about 1.5 million or so. I can't remember what the exact number is now, but we only have about 1.5 million loans, properties for sale in the US. A lot of those are already under contract, so you can't really count those as much. So there's no inventory. You got to have an inventory to have this bubble, right? And we don't have the inventory to even have a chance to have this bubble. And rates going up, we already see that we're going into a recession. Right, but the inflation has definitely hit us, and we're going up in, we're in the sevens. Well, the funny thing is, when I got started, we were in the sevens. 30 years ago, I was quoting 7.5. I remember a guy one time saying, "I'd love to see that in the fives," and I was like, "In your dreams, you'll never see that." And then, here I am. At one point in time, fives were a high rate, right? I was like eating my words. But no, I don't see us going up, and anytime in the near future, I see us actually going back down. And as far as the bubble, that's just them trying to create fear, because that's not going to happen because we don't have the inventory. Right now, actually, the funny thing is, every recession in the last 50 years that we've had, housing values have gone up. Even in 2008, the recession, there was a housing crash that caused the recession. So the prices all went down, the values all went down with the housing crash. But then after that, there was the recession. And that's when the values started going back up again. So every recession, even the one coming up, we're still going to see values keep going up. Real estate's a great thing to invest in.
Well, the crash in 2008 is something that's memorable because most people got hurt by it one way or another. A lot of people lost their homes. A lot of people lost their investments. But I think the thing that a lot of people don't remember is that the prices rebounded fairly quickly. I mean, it wasn't quick enough for most folks, but they did come right back up and exceeded the pre-bubble rates within just a few years.
Yeah, I agree. I mean, that was a tough time. I mean, as mortgage guys, I saw my career kind of just go away overnight. I had like 20 some loans going on, and then they reevaluated all the houses, and all of a sudden I didn't have any. And I was like, holy cow. So we all were doing other things to try to create income while we held on to our license and keep moving forward. And
yes.
But I'm not, and so I would normally, if I were thinking there was going to be a bubble, I'd be really, really, cautious and afraid right now. I'm not worried about a bubble at all, because it can't be with this inventory.
Yeah, I know you and I speak regularly, and you seem nothing but optimistic every time I talk to you about the market.
Well, it's weird because it did slow down for a little while. Rates got up, and then became the seller's market. And now that market's, I feel that changing. Maybe you've seen this as well with the sellers and stuff.
Yeah.
And I'm starting to see a lot more traction lately. So I know this sounds I am bad, but I have no problem with the tough times because that kind of weeds out the people that just come in to make a quick buck and then they get out, and that gets them out of the way so I can do my job even more and help more people.
Yeah, that's a good point, Steve. And you're right. Whenever there's any kind of big change, and you know, to most of us, this has been a big change. I mean, we were down in the twos before. Now we're up, you know, hovering at the time that we're recording this, you know, not far from 7. And when there's big change, people pause for a minute to evaluate what's going on, make sure that they got their feet on the ground, and then things get going again. Because I just got the most recent stats, and we only have 1/5 of the available houses that you can go out and buy right now than we would have if we were considering it a normal market. So we'd need to have 5 times as many houses to have just a normal market, not even crossover into a buyer's market. So we've got a long way to go. So it really doesn't resemble 2008 at all. Whereas 2008 was caused by, I mean, in my opinion, and you can correct me if I'm wrong, it was just flat out mortgage fraud that caused the crash. Whereas now our difficulties are being caused by a shortage of available houses.
Well, and on top of that, you know, now the lending policies are much different, right? Now they've loosened up the lending policies to where we have bank statement programs, and we have programs where you can use the rental income to offset the mortgage payment. We have some really creative stuff, but these programs, it's like the old subprime, but they're not, because these programs, people have to have at least 20% down to do this type, or maybe 25, or sometimes even 35% down to do these type of loans. And the rate's a little bit higher, but they have what you say skin in the game, right? They have to have, they have an interest in it. And where before, you know, they were doing these 80-20 loans where the customer had no money in it at all, right? They were getting 100% financing. They were just putting down income figures on the application. I mean, I couldn't stand it. And now everything is verified. I mean, we're if you give us tax returns, we gotta get tax transcripts from the IRS to make sure they match. Everything is verified. We have, back then, I mean, they didn't do all these checks and balances. Nowadays, we have fraud reports. We have MERS reports to see if you own any other property somewhere. We have all these different things that they do. I mean, every time that I close a loan, even though I'll do a lot of loans in a month, every loan that I close, they have to do a background check on me to make sure that I'm not, you know, Taliban or something else, right? So that report has to be in every loan we do as well. So they're very, very cautious. That's another reason why I'm very confident that we're not going to have any kind of bubble besides the inventory, which is obvious. We don't have all that fraud going on.
Yeah, you're right, because the government stepped in, and I think they really did do a pretty good job of ensuring that something like that's not going to happen again. Now, of course, nobody has a crystal ball. There might be something down the road that nobody's ever even thought of, but I believe they've got a really good handle on it, and I don't see how any kind of big mortgage crisis could ever happen again. Do you?
Well, I can't say ever happen again because I don't know what's going to happen in the future. But at this point in time, I don't see anything happening for quite some time. That's for sure. They definitely have a really good checks and balances. Everything from, even with the title companies, you know, they have, you know, wire fraud is a problem at times, right? So if you go to wire funds to the title company, you can't just take their email and wire. You have to call them and verify the number. And so they won't give it to me. I can't give you the wiring instructions because people will go in and grab that email and they'll change the wire number and then send it on to you. And now you're wiring it out to some other country, right? And so that's kind of how they got. So now, I mean, this has been going on for years. The title companies make the customers call them and go over the instructions, which is great. You know, keeps the wire fraud.
This might be a good time for a little public service announcement about how to avoid wire fraud. The main thing you need to know to avoid wire fraud is that your realtor or nobody from your realtor's office, your lender, nobody from their office will ever give you wiring instructions. And you shouldn't discuss wiring instructions with your lender or your realtor or anybody in their offices. The only people here in Florida, anyway, that will ever give you wiring instruction is your contact at the title company. And we recommend that if you're given some instructions, call your contact at the title company. Don't use the phone number that's on the email that you got. Use the phone number that you used before when you talked to them, and verify it every single time. Now, of course, they're going to make sure that they give you all these instructions, and we always try to. I know, Steve, that you do, because we don't want anybody to get ripped off, but it does happen. Fortunately, I don't know of anybody that it's happened to, but I know that it does happen. So that's our little PSA for today.
There you go. There you go. Good move.
Steve, thank you so much for speaking with us today. It's awesome. And we really appreciate the benefit of your 30 years of experience as a mortgage loan officer. And thank you so much. We really appreciate it. Now, just in case people want to get hold of you, how can people get a hold of you, Steve?
Well, Chuck, first of all, I really appreciate it. Thank you. And best way to reach me is on my cell. I mean, I know there's a lot of different ways. Best way is on my cell, 727-415-1842. You can text me, call me, evenings, weekends. In fact, I do a lot on evenings and weekends because that's when people aren't working. That's when they're best time. So 727-415-1842. You can email me. A lot of people like to email. S for Steve, S Kelly, Kelly, at allwestern.com. So Kelly at allwestern.com. We're on Facebook, we're on Twitter, we're on Instagram, we're on all the social medias. So, I mean, there's a million ways to catch us now. Just pick up the phone, it's free. Give me a shout. Let's go over what you got. I'll do everything I can to help.
That sounds really great. Thank you again, Steve. Really appreciate your time today.
Thank you, Chuck. I really appreciate it.